We live in a 24/7 economy, and that comes with all kinds of advantages, but it does carry some inherent disadvantages, and you need to be wary of this when you run your practice, when you build portfolios, when you create allocations for your clients, because fortunes are fragile.
This is The Rare Advisor, proud to be a part of the Advisor Advancement Network and home of a business model supercharged by recurring and repeatable events. Your host is Mike Walters, CEO of USA Financial. He is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor.
We live in a 24/7 economy, and that creates countless positives for all of us, but it also carries along a few negatives to be wary of. The 24/7 news cycle, social media, just the momentum that can be built out of the flash can really create a disturbance in your business and in your practice. So this applies to not just how you run the business that you're in, but it also applies to how you build the portfolios and the allocations that you design and structure for your clients. So let's take a quick look at Facebook. Obviously, you probably have heard some of this. It was in the news as of late, but Facebook is betting big on the metaverse. And not too long ago, they ended up reporting weaker than expected revenues and or earnings. But probably even more important, they had to also report their first ever quarterly decline in daily active users. First ever quarterly decline in daily active users. The result was a $230 billion drop in value. It was the largest one-day value drop in stock market history. Fortunes are fragile. Businesses are fragile. Portfolios are fragile. Just to put this in perspective for you very quickly before we get to the real moral of the story, Facebook dropped $232 billion in value. As I mentioned, it was a stock market record. This is a company that was the sixth largest company in value, or is the sixth largest company in value in the United States. A company that most people would think of as being very, very stable. Now, you've probably heard of pre-market and post-market trading and activity on the stock market. Well, this is what happened the day or the evening that Facebook, Meta, the new company name is Meta, the drop that they took place. Where this highlight is, you'll notice if you look real close, the market actually went up for a couple of minutes, about 3 minutes after market close, and then it dropped like a rock. In 23 minutes, Facebook, Meta, lost 24%. 23 minutes, they lost 24%, which equaled $200 billion in value. So just that one day, for them to open up the next day, this is where they ended over here after that significant drop we just looked at. And the red line brings you all the way across. It wasn't until the middle of 2020 that their stock value was at that level. And since then, there's been a few more drops in some of the daily values. And while that's important from an investment standpoint, that's not really what I want to talk to you about. As I alluded to, I want to talk to you about the fact that fortunes are fragile, businesses are fragile, and portfolios are fragile. So how do you create something that's stable and structurally sound inside of a fragile environment like that? Well, it's really all about systems and processes. That's what wins the day. So the most important thing in your business is having a predictable practice that will create a predictable outcome. What we like to say is make possible predictable. So think of it in terms of almost like the opposite of the definition of insanity. You've heard that before, right? Doing the same thing over and over again, but somehow expecting the results to be different. Well, the flip side of that is executing a proven process precisely in knowing that that result is going to be predictable and repeatable so you can manage the outcome. So just like doing the same thing over and over and expecting a different outcome can be the definition of insanity, meaning if it didn't work before, doing it more often and quicker isn't going to make it work any better now. But the opposite of that is also true. By definition, it has to be. If I've got a proven process that I can execute precisely, I will end up with results that are predictable and repeatable. And that's the key to success in making your practice so that possible becomes predictable and literally even becomes practical. Easy for me to say. Too many P's in there, right? So here's my point. Think of your business like one big process and system. We live in an intangible environment. So you have clients, no doubt, who are in manufacturing and various other hands-on oriented businesses. And they have assets and they have machinery and they have raw materials with costs of goods sold. Well, we're very intangible. So your assets are your skill set, the systems and processes you create around your skill set and your offerings, and your ability to deal with your clients in a way that makes them feel comfortable to trust you to touch their money, to follow your advice, to be coached by you. So those are the assets that you have. And just like you see an assembly line in a manufacturing environment, you need to create assembly lines inside of your practice. That's how you get the processes and the systems to create predictable outcomes. It's also how you take a very intangible world and make it tangible, which makes it more valuable should you ever wish to retire, sell, move on, hand off to the next gen advisors, whatever the case might be. But it also makes it more valuable for your customer. And now we're in the beautiful part of in our world, what's good for the customer is good for you and vice versa. We do not have opposing directions that we work at with our customers. We are on the same team with our customers. And the good news is, generally speaking, you can pretty much count on the fact that if it's good for you, it's good for your customer. If it's good for your customer, it's good for you. Having systems and processes in place is what makes the difference. Now, one could argue that Facebook has a tremendous history of building that technology with those systems and those processes. And, they've been deviating a little bit. I don't know if that's exactly what happened, but they've obviously turned towards the metaverse. That's something they're serious about moving forward and likely will capitalize on that, knowing them. But in the short term, when their active users actually had their first quarterly decline, suddenly there was a tipping point that took place, at least in the stock market anyway. Think of those tipping points that can take place inside of your business. You're on track, things are rolling well, and all of a sudden, whoop, it's like a left-hand turn takes place. Systems and processes are like guardrails to keep that sort of thing from happening. And the same thing goes with portfolios, right? Having a formula in your portfolios. Why are you doing what you're doing? Why is it allocated the way it is? How are you managing risk within that? And what sort of risk management tools are embedded inside of that portfolio so that they can act accordingly on behalf of your client and create guardrails for those portfolios. So, there's a bunch of different analogies in here you can think about in terms of how these fortunes truly are fragile. But how do we protect them? We protect them with predictable systems, predictable processes, making possible predictable.
This information is for licensed financial professionals only and is not intended for use in soliciting sales from the public. The views expressed represent the opinions of the presenter or their featured guest, not necessarily those of USA Financial or its affiliated subsidiaries. Industry references are generic and not intended to represent actions or beliefs of any individual or entity. Content is only presented to illustrate general principles, beliefs, or ideas and should not be construed as legal or regulatory advice. Trademark and copyright protected. USA Financial and Affiliates.